Hello, Warriors. Dale Pinkert here with TradeGATEHub.com, and we're powered by TradeView Markets. Check them out. You could trade everything there. I want to start off with a couple of important themes. And if you've been following our videos, you'll know that we talked about top in the natural gas market. Up in here, it had one more jiggle. We were still bearish, and we've had a big break. And this could possibly be foreshadowing that began to happen in a fairly big way with a very solid down day in the oil market. Last week, we were down $7 here, threatening a moving average. If you go back a week or so, you'll see how I was probing the top, probing and protecting with stops, and said that you should be out of oil issues, which have even performed worse than the underlying commodities. So if we're topping out here, and we've topped out in natural gas, and maybe this is going to be a little bit more long lasting. If we get back down towards 94, that could be a major breakdown. That could take us very quickly to $80. I don't know what the catalyst is going to be, but this could end up being a failing rally. And although we may try and hold at different levels on the way down, we could break down under 94. And what's going to be the significance of that is that's going to take some of the interest rate pressure off of the market. Last week, I talked about fading the Fed and looking for lows after a wave 4 in TLT, and that we'd have one more decline for a wave 5. Looks like that has manifested. Bonds look pretty good to me. That's pretty good action after a 3/4 point hike by the Fed. Same action that we had also in the 10-year. So here was the Fed. And if we start trading back under 74, I think you could declare it a top. It's trying to hold prior highs up here at the 320, 325 level. But if crude is down and we get energy prices down, maybe gasoline prices just stop going up, that's also a refining problem, not just the cost of energy, that could take some pressure off of the market. But before I get to the market, I want to go over what I entitled this video, and that's if there is a stop hunt in euro, which would imply one more high in the dollar, which I think is viable, can happen, trade over 106.30 one more time, one more high for a third drive. You look at the weekly on the dollar, and we've had 2 drives here, right? We've had 1, we've had 2, maybe we come down a bit and then head up one more time. But I want to talk about this. There's going to be a lot of stops under this low that we had at, this was 103.60, this was 103.50, and then if you go the monthly, in 2018, that was the same level that held. So, well, just think of my Twitter handle, Forex Stop Hunter, and here's the low I'm talking about, 2017. And the headlines will be that we took out making new 20-year lows, parities just around the corner. And what I'm looking for and anticipating, should that happen, is that we take out all the stops, all the buy stops, all the longs going back to 2018, and they'll consider it a major sell signal, start talking 97 euro, something like that, 98 euro. And what we could have is just a flush out under the stops. So what you're going to do is, if this scenario manifests and plays out, and we have new lows that liquidate everyone out under these 2 lows plus the 2018 low, and then we start trading back above 3.5. It doesn't have to be the same day, but sometimes it does happen within a 24-hour period. You knock out the last remaining longs in the market. They're glad to be gone, and then the next day we're well above the stops. That's exactly what happened in silver when we broke down here, okay, when we took out these lows and went to took out these 2140 lows that kept holding. And now we're still 20 cents above these lows. So something to keep your mind on should we get one more push of strength in the dollar. It's also possible that it's topping, but I'm looking for the potential of one more high in the dollar. The end's interesting. It's making a new high here, or at least attempting after this big break. And it's dividing, I showed you the yield chart, and yields are dropping, but the end's about to push new highs. I may be interested in taking a stab. If you look at the daily, we're going to be under 70 at new highs, and we're not that far away. The high so far has been 35.44, and the high from last week before we got a 200-300 pip pullback was 35.59. So, we're only one good day away from making that high. I really don't see anything on any time frame that's going to confirm. I'll be looking for something there for a short. Yeah, I still respect the way gold is holding up after they tried to break it down last week. When I left you Wednesday, I talked about this black line that I had in there forever, and the market made a stand there. I'm always still amazed how these lines work, but yeah, here was your daily. And we held it. Getting back above this 1880 level, 1890 level is going to be critical. I still believe that without many other things making new lows, that the gold looks okay. It looks good. Silver as well, putting in a higher low at the 21 level. I like the metals, and I'm wrong under last week's low. And why don't we wrap it with the S&Ps? So in the S&Ps, I had this line drawn, and last week I said that we could trade at this line that was like 36.68 or 80 at the time. And as you can tell, we had some interday spikes underneath it. Here's drive 1, here's drive 2, and look at the glaring divergence. This is a 4-hour time frame, and the whole world's bearish right now. I'm not saying that we can have one more spike under this level for a 3, but I could see the potential for a summer rally in equities, and the catalyst that could really generate it would be if the yields that I showed you topped, and also a weaker dollar, I believe, would be positive for the market. And tomorrow's the first day of summer, so I'm not saying it's today, tomorrow, but I'm looking for a very nice summer rally. It may have started last night in Europe, but I think we could have a real nice summer rally, at least get back to the 4,200, and then we'll think about where else it could go, maybe 44. But I think there are opportunities to ride equities this summer for, at the minimum, of rip your face off bear market rally. So that's it. Keep watching the gold for this important breakout. This channel line, let me extend it, is now coming in. Have some pretty good confluence right at this 1880 level. So, and that was very close to this breakdown. So see all the confluence coming in here between 1875 and 1890. A breakout over here, and I think you have 1980 in a hurry. And last week I did think that silver might have broken out when we were back above this pivot line. Silver looks like if we have a 1.618 rally of this magnitude, this was $2 in silver. So 320 from these lows is going to take you up towards the 24 level, 2420 right in here, which was a very important resistance level. That's a target I have in silver, although longer term I'm looking for higher numbers. So enjoy your holiday, everyone. I'll be here with Mike tomorrow at 11 a.m. And, I'll lay out my narrative to Mike and see what he thinks. Good hunting the rest of the day. If you like what we're doing, hit that like button. Come and visit us, bring your charts and your questions, and the team would be happy to help you out. It's our mission to build up and edify traders every day. So that's it. Don't just count your pips, count your blessings. Check out TradeView Markets. That's our sponsor. And I'll see everyone tomorrow with Mike Venezia.